The U.S. Meat Export Federation's spring conference took place in Kansas City, Missouri. Hi, I'm Susan Littlefield on the Rural Radio Network, and the report's being brought to you by the Nebraska Corn Board, working with the U.S. Meat Export Federation to contribute more than $166 per acre to Nebraska corn growing. Comments today are coming from Randy Blach, who is CEO of CattleFax, as he and I sat down to talk about what's going on in this cattle market.
Trends have continued to be higher, but we've had a lot of swings. I mean, unprecedented swings that we're seeing in these markets. I think that's going to continue. You know, we need outside money is a big part of these markets. We need fund length to create opportunities to lay off risk. When the funds take their money and go home, you just like last fall when we went through that tremendous correction in the markets. We went through a major liquidation of outside money participation. We saw some of it come back in the winter. Then with the avian influenza news, it all left again. We had another major flush down in here from March 20th to April 15th, and now these markets look like they're stabilizing and getting some footing and starting to see these cash markets heal up. It was unfortunate with the news with avian influenza, with the impact it had psychologically. These markets would have had a pretty nice run earlier. We're getting it going now, but it really delayed the spring rally.
Do you think for some it might be a little bit too late?
Well, there's always people marketing cattle every week, and you hate to have these kind of things impact them, but they do, and we've been used to that over a long period of time. The markets are going to be higher again this week. They've had a nice run in here, so we're basically back in here now retesting the highs that we made the third week in March. So we were right up against 189.5 was where the U.S. average was the last week in March. We'll be well above that in the northern markets this week. Looks like we'll probably be somewhere maybe up around 188 in the southern markets this week. So a nice recovery. And we're getting the beef market, getting some of the good spring demand in here. So the beef complex has had a good run. We're setting up for all these features. We've got several big beef feature holidays here with the Memorial Day holiday, Father's Day holiday, and then followed up with the 4th of July. So all that was just delayed, but it's finally coming.
Randy, do you have any weight concerns at this point with these cattle?
No, it's just economics 101. I mean, it's just pretty simple. We got fewer numbers to harvest out here. We've got non-fed slaughter or cow and bull slaughter. We think will be down 700 to 750,000 for the year. We've got fed slaughter that'll be down 700 to 750,000 head for the year. So, 1.5 million head reduction in the number of animals we harvest. With cost of gains back here in the low dollar, and the price of fed cattle up in here in the 180s and 190s, it's a strong economic signal to put more weight on each animal. And the market still wants more choice and prime carcasses. That's what it wants. And so we'll be able to do a better job of producing more of those type of carcasses as we go forward.
So the $1 million question is, what about these heifers? Are we starting to hold back some of these gals to keep them back in the pastures versus the feedlots?
Well, we're seeing the number of heifers that are being placed on feed slow down. That's definitely showing up. I would say we're right at an in-between stage. We're no longer liquidating heifers by placing them on feed, but we're not yet at an expansion phase. I'd say we're right at a stability phase with the heifer numbers. I think that'll pick up the pace as the year moves on. Cow slaughter has declined substantially. We're off about 300,000 head on cow slaughter for the year. We think that number will continue to decline, as I mentioned earlier. And again, with it declining the way it has, I think January 1 of 2025 will be the low in the nation's beef cow herd.
What is your overall, I mean, you're here at USMEF, a great opportunity to talk to folks that work so hard to promote what we grow. What's your outlook and discussion that you're going to share with them this afternoon?
Well, obviously, all these markets are important. If you look at the amount of value that we generate out of our export markets for the U.S. beef industry, it's over $10 billion a year that comes back into our industry. If you look at the per head value contribution of exports, that number has been ranging from $450 to $475 a head. So those are huge. I mean, without export markets, what would we do with all this protein? You know, the U.S. is one of the premier providers of the highest quality, safest proteins to consumers all around the globe. Not just beef. Look at pork. We export nearly 25% of all the pork we produce. We export between 15 and 20% of the poultry we produce on an annual basis, and historically 12, 13% of all the beef. So this is a big deal. You know, you're talking about 17, 18, 19 billion pounds of protein that we export onto the global marketplace on an annual basis. So I think it's a simple thing when we just sit back and all reflect on this. Only 4% of the world's population lives in the U.S. So we need to continue to develop more markets around the world for the long-term benefit of U.S. producers.
Talk about that long-term. What is your outlook summer into fall for this cattle industry?
Well, I think we're going to have another solid year for our cow-calf producers. You know, that's the area where you really have to change. I mean, we didn't make any money in that segment of the industry from 2016 through 2022. I mean, it was a big blank. No money was made there. They made some money in 23. They're going to have another strong year in 24. I think these summer videos will be stout. Fall calf market will be strong. Remember, there's just not enough cattle to supply everybody. So as you come through this stage of the market, cow, calf, and stocker operators are going to see record high prices. We're going to see record high prices for fed cattle. I think we'll sell cattle at the highest prices yet into the fall of the year. So looks to me like we've got a couple more years of these trends ahead of us.
Some good news after the struggles that these guys have seen.
Well, there's good news, but we've had good news. It's just the volatility. And that's a good reminder, I think, for all of us is this volatility is not going to go away. People have to continue to learn how to manage the risk, whether it's in futures, options market, the livestock risk protection programs. There's a lot of tools we have out here that we can get ourselves in a position that we don't have to bet thy whole wad. And I think once producers get more comfortable with that, it'll take a lot of pressure off them on a daily basis.
Wonderful. Anything else you'd like to add?
You know, I'd just say hang in there. I mean, it's been a long haul, but, you know, we're a little worried about the weather pattern shift that's forecasted for fall. But right now, grazing conditions are excellent in a lot of areas. Our water, water's been as big an issue as grass has, and all of our tank water has pretty well been filled up from central South Texas, North Texas, all the way up into the Flint Hills and the Oklahoma grazing areas. So that's been a big deal to see that pond water get back and replenished. So I think that'll give us some stability as well.
My conversation with Randy Blach from the USMEF conference in Kansas City, Missouri. You're listening to the Rural Radio Network.